If we have a cash payments journal, we are going to have a cash receipts journal because we're going to have to document and keep track of the money that's coming into our business. So we're going to do that within our cash receipts journal. So what type of source documents are going to go on our cash receipts journal? R for a receipt, correct? Okay. How about a T? Remember what T was? For your calculator tape? Sometimes when they went through and get going through and doing your total cash sales, you'll put that in there. So you will find that you're going to have more than one singular type of source document in your cash receipts journal, which is when we look across, we have our date column, we have our amount title, and then here, instead of like on our purchases journal where it says purchases number or sales number or check number, right here it actually says doc number for us. Right here we're going to use for posting, but let's look at our columns here. We have a general debit and credit column, and that's going to be used because some things just don't fit into a special column. For example, if I receive cash from an owner as an investment, okay, so I'm receiving cash, so we know that would be in here in the cash receipts journal, so cash would be debited, and then it would be our capital account, so capital doesn't have a special column, it would have to go under our general column. Right here, accounts receivable credit column. Now this is a common mistake. Remember, we have a separate account right now called accounts receivable, just like we have a separate account called accounts payable. It's a controlling account. At any given point, we need to know how much money all of our customers owe us, because that is increasing the value of our business. So before, I would write accounts receivable Nikki I. Now I don't write accounts receivable. All I would do is I would just put Nikki Ike there, and then I would use what column? Accounts receivable. So what would happen is when I go to post this, I will post it twice. I will post individually to Nikki, and then I'm going to post the total to accounts receivable to that accounts receivable, so it causes us to have less errors. And then what we do at the end is we go through and double check that everything comes out, because all of my individual customer accounts, if I add that up, that should equal my accounts receivable. So anytime we're affecting customers, and our customers are going to have a 3-digit number, where our account numbers are going to be 4, our customers are going to be a 3-digit number, and what number are they going to start with? Our customer is an asset, liability, owner's equity, revenue, expense. Accounts receivable, Nikki Ike, is what kind of an account?
Oh, asset.
Accounts receivable, asset, correct? So our customer numbers are going to be a 3-digit number, and they're going to start with 1. Our accounts payable, like Don's Quality Market we owe money to, it's going to be a 3-digit number also, but it's going to start with a 2. Because assets have to start with the number 1, liabilities start with the number 2. So your account numbers will clue you into whether or not you're in a subsidiary ledger account or a general ledger. General ledger accounts will have a 4-digit account number. Subsidiary ledger will have 3-digit account number. So you can tell the difference even looking at the account number which ledger you're in. So we have accounts receivable credit column. We don't have a debit column because we would not use this cash receipts journal if we were going to be debiting accounts receivable. We do have a sales credit column. We do have a sales tax payable credit column. And we also have a sales discount debit column. Now, sales is a revenue account. Okay? Revenue increases our owner's equity, so therefore it's going to have a credit normal balance. Okay? Now, sales discount. Sales discount is a contra account to sales. What we do is we offer our customers a discount. We will tell them, hey, if you pay us within the first 10 days, we'll give you a discount. Just like some of our people we bought from give us a discount. But what we do is we have to keep track of that. Because if Wayne comes in and he buys something that's worth $100, and I tell him if he pays me back right away, he's only going to owe me $90. But if he doesn't pay me back right away, he's going to have to owe me $100. It's kind of up to him whether or not he wants to give me $90 or $100, right? But in the books, how much money do I have to put down that Wayne owes me? $100. But if tomorrow Wayne gives me 90, I still need to affect Wayne's account by 100, right? He's going to have cash of 90, so I have $10 there, and that $10 is going to go under that sales discount. Okay? We keep track of sales discount to show throughout the year how much money was affected by our customers paying early. Why do we want our customers to pay early?
Money invested.
Yeah, we have money then. Because as of right now, Wayne has $100 worth of my product, but I don't have any money for it. So if I need to replace it, do I physically have cash in my business to replace what he just bought for me? So it's a way for businesses to watch their cash flows. One of the reports that you had to print for me was a statement of cash flows for creating the band. And that really just goes through and looks to see where is their money going in and out. Businesses will have to watch when they have large payments going out to make sure they have enough cash in their account to cover it. They may have lots of customers that owe them money, but they may not physically have the cash to do that. And you never want to be an employee in a business where the employer comes up and says, sorry, we don't have enough cash in our account to physically write you a paycheck. Wouldn't make you very happy with it. Because then what would happen to you guys? Would you be able to pay your bills? So businesses have to very closely watch that, and they will offer incentives like that, and so they can get money in, so they can keep generating their sales. So sales discount is a contra account to the account sales. So sales has a revenue account, it has a credit normal balance. Sales discount, therefore, contra account would have a debit normal balance. Okay? Sales tax payable credit. No, we see the word payable in there, we think bing, 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 liability. Okay? Anytime you see the word payable in any account title, you know it's a liability. Liabilities are on the right-hand side of the accounting equation, so therefore it has to have a credit normal balance. So we have a column here that says sales tax payable credit. How is this going to be used in our cash receipts journal? Basically what's going to happen is we go through and record our cash and credit card sales. We're going to have the value of our sales, we're going to have the value of our sales tax, and we're going to have our cash. So we are not going to have much need to go through and use our sales discount sales tax debit column, which is why we only have that credit one there. Now what we do need to watch though, what makes it a little bit harder in our cash receipts journal is you are going to have, for example, $100 here, $25.75 here, then $125.75 here. So when you are going through and working on proving this cash receipts journal, oftentimes you have to go back on across each line and add these two items up to make sure it really does equal your debit. A lot of mistakes are made in there because you don't realize that you made a mistake. Maybe you forgot your cents. You transposed your cents, meaning one spot you have it written as 25 and the other spot you have it written as 52. It's the same numbers, but you flip them. And you have to look really close to see when you flip those type of numbers. Okay, so we're going to take a look at how do we put some transactions into our cash receipts journal. We're going to use page 16 for graphics company. We're going to use the current years to journalize the following transactions on line 1. Source documents are abbreviated as follow. Our receipt, and now instead of just using a T, we're going to use TS for terminal summary. Basically, that's going to be like the cash register report. So, we're going through and doing October of the current year. The first transaction reads, receive cash on account from Oakley Company, $371, covering S96 R144. Hold the horses. We got 2 source documents. What does that mean? Okay, but why did they give us 2? This first one right here, S96. I told you anytime that you see an S that you have to think sales journal. But what we're saying here is originally Oakley Company bought from us and I recorded it using S96. Now they're paying off S96. Okay, so if you ever had to go back and track to see which payment which original invoice it was, you could go back to that original invoice and track it down. So we know the actual invoice or source document we're going to use here is going to be that R144. So let's get our month and our day on here of October 4th. We already on page 16 of our cash receipts journal. That's located right here in the upper right hand corner. My account title here, I'm going to type in Oakley Company. My source document, I got to type in R144. I got to put the whole thing in. Post reference stays blank. Now, 371. We know it has to go in cash, correct? Now, what you are used to doing is putting it here in general. Don't do it. Does not go in general. Where does it go? Oakley Company is an accounts receivable account. Normally, before we wrote accounts receivable Oakley Company. So we have to put that 371 in that accounts receivable column. Okay, so that's how you journalize receipt of cash from a business. Second transaction, recorded cash and credit card sales, $8,361 plus 60 cents plus sales tax of $501.70, a total of $8,863.30. TS 43. Okay. We'll go through and put in the date of the 13th. Cash and credit card sales. What's my source document? Sorry, what's my account title? You're right on my source document, but what's my account title? Okay, what accounts am I affecting? Cash, sales tax, and sales, right? So I have sales, sales tax, and cash. So sales is right here, I have a column. Sales tax is here, I have a column. And cash is here, and I have a column. It is a check mark. I'm using all special columns. You cannot count accounts receivable here as a special column because you need to know which customer just paid us. So when we use accounts receivable, we still have to put in the name of that company or that individual that owes us money. So source document's going to be a V, or account title is going to be a V. We're going to put in TS 43. You need to put a check mark in the post reference. Why? Because I'm not going to post this individually. So remember, a check mark in the account title means you put a check mark in the post reference. Sales is going to go in for $8,361.60. Sales tax is going to go in for $501.70. In cash will go in $8,863.30. Now, you will have an assignment where you are going to need to calculate all of the sales tax. What they would do then is they would say plus sales tax, and they would give you a percent. You would need to take your sales amount, multiply it by your sales tax percent, put it in here, and then add those two across to get your total cash. You will have an assignment like that in this chapter. Okay? The third transaction we're going to look at today, received cash on account from Sierra Company covering S97 for $5,998 less a 2% discount. Here we have to do some calculation. Basically, Sierra Company is that example just like I talked about with Wayne. They're going to pay us early and they're getting a 2%, but they didn't tell us how much, so I have to do some calculation. Fill it in with the date. We know that Sierra Company will go in the account title, or Sierra Supply, excuse me, and it's going to be R145. How much money does Sierra Company totally owe us? Do you see where it says that right in there? $5,989. That has to go in accounts receivable. What I need to do now is use my calculator, and I have to calculate my discount. So I'm going to take $5,989, and then I'm going to multiply that by 2%. So I have a discount of $119.78. Do you see how we got that? You are going to need to calculate that on your future assignments. You take the value of the invoice and multiply that by your percent. And in this case, it was 2%. Now I need to calculate my cash. So I'm going to take $119.78 and I'm going to subtract $5,989. So the amount of cash that I'm receiving is going to be $5,869.22. October has how many days in it? 31. So we're going to do the date of the 31st and then totals. And I need to go through and add them up. So I'm going to do my accounts receivable. After you have them totaled up, you need to go through down here on the bottom. And put in your amount for your information. And I got my debits and credits to equal.